investment portfolio update, December 2022. Secure the rigging. That is the subtitle for this month. Look out for 2023 coming ahead, incoming. That's all we got. So this is our monthly portfolio update as to what I'm doing, portfolio allocation and the weightings, the percentages. So again, never financial advice, only freedom advice, as I like to say. And this is the monthly update as to what we're doing. And I hope you'll notice a pattern here, which I believe I touch on at the end here. So hope you notice a pattern as we go through this. And it's a really big thing that, again, helped me in my hockey career, helped me in business and investing so far just in the last 30 years, the first 20 years of hockey, and then the last 10, 12 years of business and investing. It's one of those secrets that I hope to pass along, that when I look back and I really try to analyze and watch game film, which is what I love doing, and I did that a ton for hockey. And again, another secret, watching game film, reviewing tape, after action report, as David Goggins says. Wow, that is one of those things when you're going back and looking. I always try to think, okay, what can I pass to my children? What can I do to help pass along the thinking to them, right? Questioning with boldness and these frameworks of what am I doing that made me successful, and what put me in upper echelons of different areas of life that I was going into, and how can I pass that along to my kids? Because you look at like different people in life, Wayne Gretzky or whatever it is, like people that have this innate talent sometimes have a very hard time explaining that, and like the nuance, and they have a hard time explaining or coaching people those layers that are added on, because it just comes to them so easily. And we all do this to a degree, right? Like if you know something very well, it's very hard to go back. You have to really like kind of break things down from first principles, right? From layer 1, 2, 3, 4, 5, 6, 10, 100. You can't just like go back and say, hey, like, you just shoot the puck, and it's like, hey, I can't skate, coach. Like, okay, we gotta back up and get the fundamentals. First principle is like, okay, now we gotta learn to skate, and then eventually you can learn to shoot. It's the same thing. Like, you gotta learn to walk, crawl before you walk, and then walk before you run, then ride a bike, whatever. So you have to learn these layers. You can't just tell someone what to do. So one of the big things is, and again, we'll touch on a little bit, is one, watching game film, and then another one we'll touch on a little bit here. Elon Musk is dropping the Twitter files, confirming the things that half of us already knew anyway, I guess. There's really no other way to put it. We are still fighting proxy wars with nuclear powers. So, imagine that. We cannot seem to figure out how to use cheap energy to fill the needs of people around the world, here, abroad, Europe. Legacy media is being disrupted by alternative media, left and right, whether it's the blue checkmark type of stuff going on with Elon. Elon's just on a Twitter space with, really kind of just normies, just regular people, hundreds of thousands of people on these Twitter spaces. I mean, there's many news programs that don't get that in a day, mainstream news, legacy media. So we are watching the active disruption from centralized authorities into the decentralized world, which is unbelievable for the consumers, unbelievable for us and our freedoms and our liberties going forward. It might be bad in the short term, but it's going to get better. Legacy financial system, again, another thing that's going to get worse probably before it gets better. Legacy financial system is being slowly overtaken by the Bitcoin network, by freedom, by decentralization. Truly remarkable money issuance in the back in the hands of the people instead of the rulers. And that's the way it ought to be. That's the way it's supposed to be. That's the way the founders talked about it. We cannot seem to figure out how to run elections or secure them here in the last month, or count votes here in America. I mean, the freest, most prosperous country in the world, most advanced country in the world, and we can't even seem how to do the basic fundamentals of life here. All the while, the bond market is still telling us there's going to be a recession in 2023. So what do you know it? Not sure how prepared the average person is for this. Many people had a rough time in 2022. We've all had different things happen in 2022 or the last 2 years, whether the shelves being more bare, paying twice the amount for food that we did a year or two ago. And again, there are some that lived their best life in the last year or two. And I guess it truly is a story you are telling yourself in your mind, as Bob Proctor would say, right? So what story are you telling yourself? Jim Rohn would always say too. People would say, Jim, you talk to a lot of people. You talk to a heck of a lot of people. Can you tell us what the next decade is going to be like? And he'd say, sure. You know what? I do talk to a lot of people. I do meet and fly all around the world. People fly me out to tell them, prognosticate what it is we're going to have in the future. And I'll tell you what, the next decade is going to look a lot like the last decade. And he'd say, they'd sit there and just like, what? Like we'd flew you around the world just to have you tell us that? And he'd say, yeah, it's going to look a lot like the last decade. A lot of crisis and a whole heck of a lot of opportunity. And all that comes down to is what kind of vision, what kind of mindset do we have? Oh, and the FTX exchange blew up and it covered even more scams and corruption inside DC, which I guess we already kind of knew was going. It's good to get confirmation, though. We want that confirmation. That way, more and more people are awakened and living wide awake. And crypto land, which again, we've talked about thousands of times here. Crypto is all a scam. Bitcoin is Bitcoin. It's an asset without an issuer. It's a commodity. All the other cryptos are scams. All the altcoins, everything. There might be some people out there trying to do good things. Maybe they're just misaligned and don't have the full breadth of knowledge. And it's not to say, again, I was there too. I was in the space. I had altcoins 5 years ago, stuff like that, and I only got rid of them 2 or 3 years ago. All of the rest of them, I started, really understanding Bitcoin 2 years ago, 2.5 years ago, whenever the lockdown started. I really got to dive in deep, and then just boom, it hit me very quickly because it coordinated or corroborated all my layers of societal learning and experience that we were just talking about earlier. These layers, they had to connect for me. All the layers I had built on top of it of freedom, studying history, studying money, sound money, politics, all these things. And then boom, once I hit Bitcoin, I was like, oh my gosh, the dominoes just fell so quickly. Not everyone has that experience. Not everyone has that knowledge base. Not everyone has that studying, that time devoted to it. So everyone's going to come to it at a different pace. You couldn't have scripted this clown world we live in any better if you tried, though. I mean, this is only a fraction of what's going on, obviously. And this is my current portfolio allocation that we have, our family office, and what we're doing. And like I said earlier, the thing I want to touch on is, again, I think it might be in the conclusion, but as you can see, there really isn't a whole lot of different stuff going on here, right? So there's kind of similar, fairly similar to the last month and really the last number of months, because we do things slowly. We don't do things knee-jerk. We aren't trading in and out of things. We aren't paying, massive capital gains taxes. That's not the way you get ahead generally. It's very tough to do that. You have to have algorithms and be, have all these quants and all these crazy smart people. That's usually a recipe for disaster. So that's why I do not do that. Again, I'm always a student. Like I said, I'm no expert. There's never financial advice, but only when I'm doing what I see is freedom advice. Being resilient, being independent, being self-sovereign, food, energy, water, security, firearms, ammo, and Bitcoin, gold, silver, having these things spread out, not just in your domicile, but everywhere. I have stuff all over the world, quite honestly, and in different areas, different places. And that's where we have to be decentralized, resilient, and independent. Because the more we can do that, the more of us are that way, the less we need government in our life, the less we need ruling class people in our life telling us what we cannot do, what we should or should not do. We don't need that. We're God's highest form of creation. We do not need people telling us what we need to do, cradle to grave, and running our life for us. We are diametrically opposed to that inherently, deep down. That's not how we were built. We were built in God's image. We do not need other people telling us what to do. This experiment of self-regulation, that's the experiment we're running right now. And we can do it because we're humans. God's highest form of creation. So let's jump into this. Bitcoin, not crypto. Crypto is total garbage, as I said earlier. There's only Bitcoin. We've already touched on this a little bit. If FTX didn't prove this to you, then I don't know what else will. I'm sure there will be other things. People will continue to get wrecked because they'll continue to try to get alpha on Bitcoin, which already, from any stat you see, 50 to 200% a year CAGR, compound annual growth rate. Why would you need more than that? I mean, the only other way I know to get infinite returns or get more than that is if you're, renovating a house and then you go refinance a house and pull out all the cash you put into it and then you rent it out. That's the only way to get infinite return or anything usually generally above that, consistently, I should say. You can do it in other things, and there's stocks. You can do it with businesses and flip businesses, I guess, and then leverage buyouts basically with businesses. You can do it in other areas. Real estate's one of the ones where you're riding the fine line though of it's advanced enough where not everyone does it, but it's also easy enough where the average person can still get into it and kind of figure it out. Doing it with businesses is maybe a little harder. Doing it with stocks, knowing companies inside and out, that's harder because it's not your company. Real estate's great because it's your thing. You know it better than anybody. So the real power lies in the fact that you can custody your own Bitcoin in a cold storage hardware wallet. You have become your own sovereign bank. I get so many people ask me like, well, what can you do with it? I can do anything with it. I can buy anything in the world with it. I can send it to anyone in the world without being docked $2,500 by PayPal because it's something I said online. I can do it final settlement with no transaction fees, no credit card fees, sending money across the world, no remittances, or fractions of a penny, I should say. And again, the greatest thing of all is I don't have any counterparty risk. No one can tell me who I can or can't send it to, or dilute my money, print more of it. They can't do any of that. They can't take it. They can't freeze it. You can't do that. But you can do that in the legacy system. You can do it all day long in your brokerage account, your life insurance, or whatever it is. They can freeze anything. Eminent domain with real estate, they can take all of your stuff. If we don't think they have the power to do that, I mean, we've already seen them doing it all over the world in all these different areas. But if you don't think that they don't think of that here in America, and have already done it to a degree in certain areas, and they will do it here, then again, I've got some oceanfront property in Nebraska to sell you. We are not immune to that. Governments are governments, no matter where they are in the world, and they always are coalescing to accrue more and more power. And we are getting to this end stage. Bitcoin fixes so many of these monetary problems that central banks have brought on us, like inflation being the biggest one, the theft of your time and energy, your wealth, your money. If you leave your Bitcoin on exchanges, you will eventually get wrecked, or rug pulled, or have your wealth stolen, whatever you want to call it. Not your keys, not your coins. And again, Bitcoin itself, the reward of Bitcoin token stays on the exchange, or on the blockchain itself, or the time chain that we call it. It stays in the time chain to audit everything, the ledger, the point where everyone can see what's going on, right? So it stays there. But your keys, right? So the Bitcoin on the chain, on the time chain, that can be moved to different owners, but the keys are held in people's wallets. That's it. Your little device that's held, they're like this big, they look like that, they're not big, and those are what holds your keys and gives you the ability to sign off on the transactions, just like you're doing a wire or something at a bank. Except again, if you hold your own stuff, you get to own it, fully sovereign. No one can tell you what to do. The banks, not so much. They can freeze it. They can tell you what you can or can't do. They charge you fees. They pay you interest to try to suck you in and get you to give you your cash, give them your cash. And again, wanted to put in here, the checking is like the hot wallets, so the ones in your phone. I only put maybe a couple $100 in there, no more than you put in an actual wallet, in your physical wallet. And this is like bill pay, right? Checking, paying bills. Just it's the new form of Venmo, PayPal, where it's completely sovereign and free. And things like Moon Wallet, Samurai, Blue Wallet, Satoshi, Aqua. This is where you can do that. I believe Phoenix Wallet. Probably over Aqua. I don't know if Aqua has Lightning enabled right now. So I like Moon though a lot. That's the one I use. Very simple, very easy. It's just like Google. It's hopping on Google. There's there's two buttons: send or receive. That's it. There's no like confusion, nothing. And then retirement, your savings, your long-term saving in Bitcoin is best done in cold storage wallets. I love the Blockstream Jade. That's one of the ones I use. The Cold Card. Those are probably two of the best ones. The third one is maybe Trezor. I'm not as fond of them anymore. I think they do other coins as well. So like Cold Card, Blockstream Jade, or Bitcoin only, I am pretty sure. And so I like those. And they're open source. I believe you can both do air gap transaction on both those. Again, you don't need to know those things necessarily right now, but I'm just telling you that from all my study, those are the ones I trust the most, Blockstream Jade and Cold Card. And Blockstream Jade is the simplest, easiest, quickest one to do. And again, take it out of the exchanges, these centralized honeypots, just like the bank. Those are banks in essence, right? And they can be frozen, and they're not yours, legally not yours. They can hypothecate it, lend it out, loan it out, like we did in some other videos. Why are these people all fearing bank runs? Like Credit Suisse, like these exchanges, because they lend out too much. I asked in the last time comment why that answer is, and I'm going to answer it in this video. Because they lend out more than they have. They take yours and they lend out 10 times as much, or 100 times, or 5 times as much as that what you've actually given them. That's why. And then people come back. We come back to get our stuff from them, our property. They're like, oh, sorry, people already came and took it. Like, what? I gave you my stuff. Yeah, well, we lent out more than we had, and people already beat you here, so now yours is gone. Clown world. Absolute clown world. Anyway, we have about 20% Bitcoin. So again, I expect Bitcoin to become a majority of my portfolio again in the next few years as it increases in value. And mathematically, we know that it will. It's going to keep going up and to the right because it's a finite asset. The only thing finite we know of besides our time, the two finite things we have in this world. Making a fair trade with yourself. And we know governments will have to print currency. Making sure, like we say, Ben Bernanke, making sure deflation does not happen here, meaning they'll continue to print. And then that was in 2002, and then 10 years later, like 2012, IMF comes out with their paper about financial repression, which is debasing the currency, printing more currency, and trying to get themselves out of debt at the detriment of their people. It's criminal. But hey, we have a way out now. We have a way out. Real estate, positive cash flowing rental real estate. So this asset class, we're still looking to refinance one more rental property. We've been kind of slowly, methodically going through this, trying to talk to some private money lenders who might want to do it, talking to some commercial lenders who might want to do it as well, and just kind of jumping through some hoops there. So just kind of taking our time there, kind of seeing how this market's playing out and what's going to happen, and trying to get some powder ready, trying to just accrue some more cash so we can keep some powder ready for this next year or two. Because the Fed's still raising rates, and things don't look great. A lot of recession stuff planned and forecasted in the next year, so we think there might be some great deals over the next 12 months. And I'd rather hold cash short term for the next 12 months and have long-term debts at low-ish rates paid off by our residents. And we have about 36% in rental real estate. And again, another caveat with all this, remember the dollar is debt. It is a debit, debt-based system. There's nothing backing it. So there's nothing backing the dollar. So the further you can get into good debt and buy depreciating assets, you will win long-term as government continues devaluing the dollar. And again, this is not financial advice. These are things that I'm doing. I've been studying this for 12 years. I've been doing it a lot on my own. There's a chance I could go under. There's a chance that you could go under doing what you do and me doing what I do. There's a chance all of us could go under, right? Anything you choose to do, whether you choose to do something or not, is a choice. So I'm choosing to try to swim with the current and knowing that no matter what I choose, there's risk involved. Refinancing real estate and pulling out cash tax-free to invest in other assets will be the people who win long-term, as history has shown us and everything I've ever experienced or learned. Savers get crushed by inflation and minuscule interest savings rates. Commodities. So this section is gold, silver, oil wells, uranium, copper. Unfortunately, I don't have any uranium on me. I don't have any copper on me. Darn it. No oil wells. I haven't bought much in this area. This hasn't changed much from last time, which we'll get into in a minute, but I know hard assets will be sought after. Primary assets are always a safe bet, not the derivatives, not the paper derivatives, but the actual oil wells, actual gold and silver. Commodities, I believe, will be in a bull market, as do many others, over the next decade or two, as derivatives crash and primary assets come front and center. And again, I would rather diversify in the analog world, spread around different vaults and geographic locations so we can access them in case of emergency. And we have about 16% in commodities. Paper, so stocks, bonds, IRAs, etc. We stopped buying our EXP Realty Company stock, and we've been going away from that, really battening the hatches down. And the Fed is committed to crushing things. They have been. They might be slowing down. We'll see. But I'd rather put it in assets I control. And when they do pivot, look out for those risk assets like the tech stocks. They will go to the moon, in my opinion. Probably Bitcoin, things like that. Those things will go to the moon when they really change what they're doing. Again, there will be time for stocks in phase 2, like we explained kind of what the phase 2 looks like. Go to last month, I explained and did a little more in-depth of what phase 2 looks like once the insurance payments pay out and what I mean by that. So go please check that out. Last month, I think it was exactly a month ago, we did our video about what phase 2 looks like once the markets switch and once stocks crash, real estate crashes and things like gold and silver and Bitcoin really go to the moon. Generally, that's the kind of like the balance there. So check that out. We have about 2% in paper total. That's the least controllable asset class. I don't have much in paper, but there'll be a time for that. And then cash and businesses, again, looking to invest in some private companies potentially, like multifamily, self-storage units, or mining operations for Bitcoin if proposals make sense. And we're reviewing some right now. Good cash flowing positions where I know the management and have controlled good eye on what's going on, the good eye in management. As you can see, we're trying to raise a lot more cash over the next 12 months because I do feel like there'll be some great buying opportunities. And cash is going to be upward of 20 to 30% of the portfolio soon. But again, Bitcoin keeps that down because we keep swapping fiat for Bitcoin, saving in that. Cash on hand is also good in case our long-term view of inflation is wrong. If we experience massive deflation and the dollar increasing in strength and going to 120 in the DXY, the dollar relative strength of the dollar, 120, I think it's like 100, 110 right now, somewhere in there, 105. If it goes to 120, 140, 160, 200, then it'll be great to have cash. So in case that does happen, which there's a possibility, then we'll be able to use that dry powder, that cash, to buy many more assets. And right now we have about 29% in cash. Actually, you know what? I don't know if I updated that totally. Okay, so we fixed that. It's 27% in cash, actually. That was the only one we missed. So these are all correct. The portfolio construction breakdown is correct. You're good to go there. And in conclusion, the Fed may be slowing rates. Good portion of my letter, like I mentioned earlier, This hasn't changed much. Not much has changed. Because patience is the biggest ingredient to successful investing. That is one of the frameworks for all of this. That is one of the things I learned in my experience of making it to the highest levels of hockey, of business, investing. Investing is kind of like driving. The people who change lanes the most get in the most accidents. The people that are swapping in and out, trying to trade, day trade, getting hit with taxes, they get wrecked the most through taxes, through losses, trying to go against other quants, algorithms, computers. Good luck. Slow and steady truly does win the race. That's why Warren Buffett is a $100+ billion man, because he sat in investments he knew more than anyone about, more than anything about, and he sat there and let those compound over decades, over 50, 60, 70 years. That is the secret, being patient. And like he always says, again, we like some of his quotes, we don't like some of his quotes. It's okay to hold opposing opinions in your head at the same time. But his secret is, I believe it's Mary Buffett, who I believe is one of his daughter-in-laws, ex-daughter-in-laws, but she wrote Buffettology books, and she wrote in there that he would find companies that he loved, or it could be like real estate, for instance, a piece of property or an area that he loved, and he would wait for that to go on sale. That was the big crux of what Warren did. He would find those things that he loved, wait for them to go on sale, and then he would buy them. We make money when we buy. The DXY, the relative dollar strength, the 10-year yields have come down, which have eased pressure a bit globally. Let us see how long the central banks can keep the tsunami from crashing ashore. Again, that tide's going out. So what's going to happen here? What's going to win? Remember, at the beginning of the article, we talked about how the yield curve inversion, or the bonds market, are forecasting recession for 2023 still. This is not the time to get fancy and try to shoot for the moon and make a killing. Be defensive and learn as much as you can. Great wealth is being transferred now and will be in the coming years for those who did not understand the flow away from them, who did not understand the global landscape, to the ones who studied and were diligent. Things will flow to them. Wealth is never destroyed. It's merely transferred. As Mike Maloney, one of my biggest mentors, always says, this is why I've been a big proponent over the past few months of sitting on more dry powder, cash. This education process is what we've been doing for the past 12 years here, and we'll continue to share what we find, what we are doing. Again, it's after action reports, game film, game tape, watching this, what I did in my playing days, watching game film, being a student of the game. David Goggins talks about after action reports, mission briefs, debrief after a mission's over. And we have to do this in our investing too, keeping a trading journal or an investment journal. And why did I do the things I did at that time? That's something I've started in the last few years. Just making sure we understand what we're doing, why we're doing it, and how we can learn from that going forward. Riding the fine line here of staying very liquid, but also don't want a ton of cash on the balance sheet for more than about 12 to 18 months here, because again, you are paying an option premium. You are paying a premium of real inflation, which is, like we saw earlier, around 15 to 20% each year. That's an option. You want that optionality though, because you're paying, that premium to have the option to have that cash available for when assets potentially come down. You can scoop up more of those assets. So you want to ride that line there. Keep in mind, again, when making an investment, it has to be beating 20 to 24% each year, or at least try to. I mean, if you stem the tide a little bit, make 5%, 10, 15, 20, but I guess that's good too. However, to truly be beating inflation and taxes, and Warren Buffett says, got to be beating that 20 to 24%. This is precisely why I love real estate. Taking businesses, reworking them, taking real estate, reworking them, building them back up, fixing them up, and then refinance them, pulling out all the cash. Then it's infinite returns. Then we're not talking 50, 100%, 1,000% returns. We're talking infinite returns. So that's the beauty of that. However, we're going to save though. This is what everyone can do. This is why I love saving in Bitcoin instead of US dollars, because it historically grows compound annual growth rate at 100% a year or so, doubling each year when you zoom out over a couple year span. And people say, oh, well, it went down a bunch in the last 6 months, 9 months, Brandon. Yeah, in fiat terms, it did, just like everything else did. Again, when you zoom out more than a year, 2 years, you see the power of Bitcoin and saving in the only finite asset we have ever found other than time. Again, I only want to trade my time for my finite time, mind you, for finite assets. Not trade my finite time for infinite pieces of paper or digits on a computer. Why would I trade my finite time for infinite blades of grass or infinite grains of sand? That's the same trade. So literally the same trade. Make an equal trade. Make a fair trade for yourself. Stay strong. And again, my newsletter is based off of 20 years of historical, political, and monetary study, plus my experiences in investing. I spent the first 10 years studying politics and history in 2000 to 2010. In the last 10 years, I've studied monetary history, fiscal history, policy, along with investing in business through what I call our family office. I always mention to anyone that will listen, you must know the financial and money games being played for any of the political side to make sense. And that's something I had to learn about 10 years ago. Boy, oh boy, was I woken up with the great financial crisis when I saw both sides are playing this game, printing currency, debasing the currency, typing digits into a computer, and stealing the wealth from all of us. And I realized there's a game being played, and I've got to figure this game out. And so I did. I'm still learning, never done, always be learning. One of the books you can go check out, though, that really will open up your eyes and really just break it wide open for you is A Creature from Jekyll Island by G. Edward Griffin, about the history of the Federal Reserve and central banking. Be ready, because everything you thought you knew isn't so. Again, special tip, watch the credit markets, the bond market, especially the 10-year treasury, to see where the markets are going. This tells us where the stock markets and the rest of the markets go. The credit markets, the debt markets, bond market is what everything else is derived from. So the stock market is a derivative of the debt market. So we watch that bond market, watch the debt, the 10-year treasury. It's going to tell us where the rest of the markets are going. So stay strong. Appreciate you. Thank you for getting resilient, getting independent, and questioning. Appreciate you and your time you are spending here with me. Please let me know what we can do better to serve you, to educate you, to inform you, and please share it. Like and subscribe. Share it with anyone you think might need it, might want this type of information, might be seeking it, or maybe they disagree and you want to bop them over the head. Either way, we'll fight it out in the comments or something like that. So I appreciate you. Thank you for your time and energy. It's the most important thing we have. Bitcoin's time. Time is Bitcoin. Again, let me know if you know of any other finite assets we truly have, truly finite. Please let me know in the comments. We'll see you on the next one.